Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So as a trader or a market participant, you have to have a set of rules and a set of guidelines that you live by, that you trust, that you stay with. You know, you have to almost live by them and die by them, but you change them when the markets change. But overall, it has to do with money management, has to do with discipline, has to do with certain phrases, whether it's never chase excitement, never sell into stress or volatility. There's all these sayings that have all been put together because over time, they typically are consistent. When we came in today, no one really knew what to expect. And all week long, everyone on Twitter, let's guess where the futures are going to open. Let's guess where the market's going to be. And I tried to be like, guys, enjoy your damn weekend. We have two levels of resistance. We have the old pivot lows, which is like 134.20 to like 134.70, and then 135.80 to 136, which was the neckline of the head and shoulders pattern. Let's see where we are. And typically, you sell excitement. And we also tried to say, if you didn't buy when the market or when the S&P reclaimed the 200-day, or you didn't buy the weakness on Friday for that reversal setup, you have no business buying a gap up and chasing it, at least in the first 30 minutes. Well, anyway, with that said, you take a look at the chart of the S&P and you'll see market rejected this resistance right at this neckline. Wasn't ready to break through. Broke. It actually gave us a better situation because it opened above it and never gave you a real reason to buy it. So it pushed through and failed. That's what we call an outside day. You're opening at recent highs, closing on the lows, sellers in control, sell signal. So when you look at it even closer, it looks even worse. So this pushed through, failed, never even went up to the higher level, but it kind of got to this pre-market, 1343. This is where it was overnight. You look at the spiders, which is a vehicle that I typically trade and talk about. This is a very big outside day. This was actually the line that I drew this morning with Jill, and that's where we reversed right away. And look, what a quinky dink, right? What is the high here? 134.25. Right into this range, the old pivot range. It was actually higher. It was like 134.50, 134.70 pre-market. But the reason why we came up with that resistance, 134.49 was a prior pivot. So that resistance turns into, that support. This was support after, right before this breakdown, comes into resistance, and that was an area. That was an area, and then this was an area. And it really gave you absolutely no reason to buy weak stocks that we talked about. We do a trader roundup. Right around 9 o'clock, if you're on the virtual trade floor, if you're a member, at 9 o'clock we start talking about more, I would say, calculated or more granular strategies, and said these are the stocks that are set up to be sold. Some stocks bounce to be sold, and some you could hold longer. And stocks that we talked about on the radio, I'm like, what? Google doesn't act well. It's up $5 into 588. That's a stock to be sold. LVS failing a lower resistance, probably a stock to be sold. The banks into resistance, I would take a look for weakness. Goldman went negative first, the rest of them followed. Later in the day, by knowing from experience that typically they try and sell the Apple event, especially if it doesn't come out with things that are expected like an iPhone 5, you wait till then. I shorted in the morning, we made a few bucks, and then really the short was a little bit later, after they were done with the conference, because you had to know what they were expecting, what the street expectations were in order to be able to sink your teeth in there. So going back to the chart here real quickly, here's the spiders. This is a very big engulfing day. It engulfed all of Friday's move, engulfed that Thursday gap up reversal, closed on support. The good book says to be short. I didn't go home short. I made my money short today selling in this area of certain stocks, but I didn't take them out. And if you look here, perhaps there's another level. Actually, the real next level is right here. And we'll see how we open. If we open them up, I think guys will try and sell it to short below 131.28. If they open up lower, bulls should try and defend some of this gap. So we'll see what happens. But all in all, I don't see any really good-looking patterns out there. This is a potent down move. I just think the market's getting smarter. I think back in the correction from 2009, there were more market participants. There was more people to fool. No one's being fooled anymore. Anyone that's still in the market is pretty educated. They follow good sites. Hopefully, ours is one of them. And Twitter is pretty adamant out there. I think there were enough guys on the feed. even if you were bullish, they're saying not to chase the excitement. Even if you had positions with hedges, like some of those guys that I didn't really understand why they had them, they still said don't add on the open. And then you obviously had the bearish guys who were just like short, 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 short. And so if you do follow the right guys, they keep you safe without having to keep the TV on all day, because we all know what sometimes that leads to. But anyway, guys were texting me and tweeting me saying, could you go over the Apple trade because you seem to have done well. The virtual trade floor followed it, but you didn't have enough thumbs, to tweet about it. Anyway, we talked early on. I said you have a inverted head and shoulders pattern with the downtrend at what, 581 to 583 at the 50-day. Sometimes they could push above and extend, and that would give us a little bit of commitment and maybe give the bulls a boost. But if it pushes through, squeezes shorts, and fails, you're going to see some weakness in the market, and that's what actually accelerated us to the downside. Now, if you look here on Apple, the event came and went, and it did a bit of a push through failure. We talk about when you play a stock for momentum and momentum leaves, you get out of the way. And what it did is it squeezed people through this resistance. It actually sort of filled the gap here almost. And actually, the gap here, the low was what? No, actually, that's not. Hold on, where was this? No, that's. Hold what the high here? No, that's actually a little bit higher. Never even filled this gap. It looked like it got close. But anyway, pushed through and failed. And if you look at the 3-minute chart, you could see it even closer, and you could see why. At least it was a calculated short. So first things first. It gapped up. This was the first little cute short that we took, but it was only a small one. And then we said, let's see how it handles the 50-day, which was around 582 or 583. It actually held, gave you a few nice trades. Then it was really noisy until they started to go over their presentation at the event today. So if you were trading Apple, you would say, okay, I'm going to write this channel down. Okay, I want to see how it handles this upper level. And that upper level was really like 584-ish, because this is where the gap started. So with that said, they started talking about Siri and all their other awesome announcements with no iPhone 5. And then you had a quick, harsh move down to 580. Okay, that's where it came into 580. I actually was in a meeting, and right around 1 o'clock I tweeted, because a lot of guys I was seeing on the Twitter sphere saying they were all in all these options. I'm like, guys, don't be all in. Long term you could be in some, but they typically try and sell an event, especially if they don't say what the street wants to hear. So PS, it came off harsh, and then I got back to my office right around here. I tested a little bit short, actually not long, got squeezed out, and then the old red dog probably wouldn't have went back to the trade, but I said, you know what, from 587 to here, this was your retest. You look at this flag little pattern, this was one little area to potentially get short. I waited to right here. I added through 580, okay, and that's when they were done. That's when there was no more potential news of an iPhone 5 or anything blockbuster. And then you had a clean move all the way down to 573. I took my trade off right around here because all I was doing was looking to make a little bit of money. Figured you have a nice void from 580 to about 576, 575, which was support from the prior day. And I covered into here, and then I didn't trade it again the rest of the day. Guys were trading it in and out. But PS, you had your first move when they started speaking, which is what the market is always used to doing. Then it tried to hold 580, had a little bit of a bounce back, retest, came back here, and then this was the clean move. This was the move that some guys wanted here and probably got too much too fast. The whole conference wasn't over yet, and they got squeezed and might not even have the wherewithal to come back here for what turned into a really nice trade. So all in all, you go to your daily chart of Apple. Today was definitely a short-term sell signal, in my opinion. And I would think, depending on tomorrow's action, if it were to break this area, okay, you have a bit of an ascending channel, which it closed a little bit below or close to, right here. Remember this ascending channel? This was the last time it had a somewhat of an ascending channel, and when it broke, we shorted it like what, 5. I remember this actually, it was pretty clean. No, it was right here, below 560, and it turned into a reversal that led higher. Now we'll see if this 569 area, if it could be a two-way action trade if the market doesn't fall apart, or it could come in and retest this 100-day, because now that this conference is out of the way, the reason why I didn't go out short Apple is because typically every wirehouse or this or that is going to come out and say either they've loved it and try and protect it. So if it gaps up, I think it's a sell. if it gaps lower and you took it short, that's what the good book says, so to speak. You can go through so many different charts. I'm just going to show you how Google is really starting to feel as if it's in a lot more trouble here. We've talked about Google many times. In the beginning of the year, it showed a nice promising pattern right there. Broke out for us, made some decent money, then it came right back in. So someone obviously knew that earnings were coming out, weren't going to be good. Pow, the earnings came out at the time. It held the 200-day, came all the way back up. Again, didn't act well on the next earnings report. Another, little discouraging sign. Then it tried to break out and failed real quickly, sellers. And now it's, before the market's ready to make lows of this move, because the spiders are still, 4 points above the lows. Google seems like it's ready to break below this 565. So that's showing you relative weakness. It's below all moving averages. I don't care if you love this search, you love the company. If you said it's your stock of the year, which I did say here, and then big deal, we also said get stopped out when we gave up the 200 at 596. So no harm, no foul. You didn't lose anything. You just lost some time value, but there were a lot of trades in the way. So if you're going to be stubborn and committed, you break this level here, there's definitely some more trouble. I don't see anything. You have this gap fill, which is real quick, but I don't think it's going to just do this gap fill. For some reason, it's down here for a reason, and it could go a lot lower. Amazon, still hanging around, a frustrating trade. Baidu, still, just a non-event. Came, bounced back on the China news, but it's just nowhere. LVS reversed into resistance again. A lot of guys sold it into this resistance, got paid, and now if it breaks this area, it could start to retest this lower pivot. Win also, look at this, just like really no bounce in a lot of these. You had to be a surgeon to make money there. Here was the outside day. Boom, not a bounce. We started playing it right around here. I know I sold some of mine a little early. And look, you have another outside day here, right? It tried to push above and failed. Take a closer look there. Win loves outside days to give you clues. Here's where if you traded it for momentum, there was none. You get out, and now look at the size of this bar engulfing this entire bar. It doesn't look good to me. At this point, I guess this is the channel here, but typically the rule of thumb is you break and you can't get back above 100. Chances are you could see a lot lower levels, and if you start to look a little bit further back and win, it really, next area could be down into the 80s. So just be careful there. It doesn't look so good. And if you look here at this uptrend, this was broken right around here, but besides that, even outside day. So anyway, win to me, it looks like an avoid / short, and do not play the accumulation game there. JP Morgan opened up, went negative. You take a look at this chart. It tried to bounce a bit. So we talked about how buying strength in the banks does not work. Right now, that's a laggard group. Well, it opened up into this resistance, failed. So once it got back below this 38.83, this was just like the markets, a sell signal, and now it closed near the bottom end of this area. So I would say we'll see how it opens tomorrow. Here is some support, 32.27. It could try and build this right shoulder here. And then all you have here is the recent lows. Still, if you look at it in perspective, from 44 down to as low as 31, what did it really bounce? Not a lot. You had to be perfect. You had to be a buyer of the news when they announced a $4.2 billion write-off, and then here's your outside day. So when you get an outside day, you never know what it's going to lead to, but you always have to clean up anything there because you don't have to know if you follow your rules. If you had, like today was an outside day, you didn't know that you would get the Dow down 150 points today, but if you shorted the spiders and said, okay, beat me, I'm short 134, I'll put a stop at 134.25. I know a lot of us took our trade off too early. You could have just sat there and trailed it and made a lot of money versus a small single or double. It was pretty much a home run. You go back to the spiders, it never gave you any pain. You go right here and you'll see on the 3-minute chart, it gapped up here and it just sold, okay? So it gapped up, said, sell, fine, and then it tried to just say go sideways here. If you wanted to wait for confirmation to get into this gap, you could have shorted here perhaps with, remember 133.55? So that was the prior resistance. That was the resistance from that day that was the reactionary high. So when it went below it, some guys said, okay, there's no more strength there, I'm gonna short it, and I'm gonna give it to at least a closing bar above that. If you did so, you got a nice short here. The reason why, if you go to your daily chart, I do remember This was it. Remember we talked about 133. What is this one? This high here is 133.93. Okay, I'm sorry. That was the high. So it actually got a blow there a lot quicker. This one, oh, here you go. I knew there was 133.53 somewhere, and that was right here. So a lot of people, oh, you shorted this. That's where it was. You shorted this versus this, which was 133.93. And then this is when it engulfed it Friday. So here, once it recrossed below this, that could have been your sell area. So if you did that or shorted it and said, I'm going to trail it, you had yourself a nice move. And if you take some overnight, which the good book says to do some, you can get some follow through. So again, you go to your 3-minute chart, and it really never gave you any pain if you were short. Sell it here, came down. Let's go to the 8-minute. Never even attempted to come back up. Never tried to reclaim any of the any of the level. So if you go like this, you pretty much have a typical pole, flag, continuation. Could have even added here to all the way to the lows here, and then you had this support coming into right here. So with that said, I don't see anything really that charts wise that I'm excited about that's tight, and I'm like, I got to buy that. There was a little anxiety that if Apple opened below 580, it's a nice push through 580, but then could also be a good short, which it wound up being. Everything else has tried to do the bounce. They're all in these lower ranges, and these lower ranges I don't think need to be traded unless at extreme points. I sent out a blog post about just the SPX, so to speak, if you guys want to take a look, twice today. And I just showed how, look what happened here, guys. Remember that July through October, you had 100 handle moves. 100 handles down, 100 handles up. 80 handles down, 100 handles up. 80 handles down, 80 handles up. This was a bigger low move through the low. So you had about 7 or 8 moves of about 100 handles. So it never made sense to buy at the high, and you could never short the bottom. So I kind of put this out there saying, with all the same headlines and things even a bit more complicated, why would you be buying into this resistance, especially after where we came from? We could definitely do a lot of this. Boom, 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 just until we decide it's going to be, enough clarity, whether it's Greece out of the way, whether it's Italy needing a package, whether it's our own U.S. debt ceiling that's going to come into play. Why buy them here on June 11th? Just a lot of summer left, a lot of headlines left, a lot of trades left. So just make sure it's the most precise, compelling trade. I know I sometimes undertrade because I'm in meetings, I'm on the road, I'm writing up strategies, I'm writing up blog posts. So for those of you that know me, you know that I can come up with 15 strategies. I might only trade 3 of them because I can't be around to manage them the way I would want to. So I'm a trader first. That's how I make about 99% of my income. But I'm building a company, building a brand, and we're working here. So for me, I love to be an offensive coordinator, let guys that are talented run with the plays, make a lot of money and say thank you. Doesn't mean I'm always going to run the routes, but I write the plays and I write them for a weekend or I write them for a reason. And when the QB sees them and they trigger, doesn't mean I'm the one throwing the ball or catching the ball, but it could be successful. So with that said, Monday, tomorrow's another day. Lads is doing the morning call. I'll probably be in the afternoon. I have to take care of a little business in the morning. Have a good night.